The rally, it's going to end on Friday, and here's why. I knew that title was going to trigger a lot of people. We're looking at the month of July. This is a chart shared by the Almanac Trader of seasonality. Now, I've showed this plenty of times before, but I love looking at this stuff to potentially find pivots in the market. And we're going to be going into the 8th trading day here come tomorrow. And then by Friday, you can see it typically peaks out around there. Now, that's pre-election year, which we are in, and that's looking at the Nasdaq. Doesn't mean it's always going to be the case, but you know, you never know. It might be. We might peak out. And typically, this is where we come into the more calmer portion of the year, and we've already had the big move, for the first half of the year, and it's been marking seasonality pretty well. So we might as well just keep that in our back pocket. But that's not all we can look at. So we're going to look at more stuff on today's Stock Market Brief show. We had CPI come out today, and well, when it first came out, Cocoa Bear was quite shocked, coming in lower than expected. The market ripped, and then it started to sink off. She started feeling a little bit better, but by the end of the trading session, zooming up, she basically passed out and hasn't woken up since. If you take a look at the 11 sectors that make up the S&P 500, utilities, a more risk-off asset, led the way, which I find interesting. That could be because it is a very rate-sensitive sector. If we take a look at what rates did today with the CPI report, we saw a pretty large decrease in the 2-year coming in at 4.72, and then the 10-year dropped as well. You can see pretty big nosedive across the board. As far as the 10-year 3-month curve, that's 161 basis points inverted, and we're still 86 basis points inverted in the 10 and 2. You can take a look at TLT, and this is pretty good for the market to see a nice big run up over there, bouncing from a pretty oversold condition, and we're still below a lot of those key moving averages as it stands there. So the inflation data came out. It came out at 3%. That's the United States inflation rate year over year. So it rose to 3%. Now consensus, right, it was 3.1, so it came under expectations and came in a lot less, than the CPI nowcast by the Federal Reserve. So beating or coming in under, the market perceives that as good. If you look at the month over month, consensus was 0.3%. We came in at 0.2%. So yeah, a decrease there. Well, technically, it was actually an increase, right, month over month. However, lower than consensus. And then we came in a lot lower from the nowcast by the Fed. They were saying 0.42. If we look at core inflation, it dropped to 4.8. Consensus was 5%. So that came in lower than expected, a lot lower than expected than the Fed nowcast there too as well. We said to look at, well, the Fed Watch tool. What did the Fed Watch tool do? Well, we're basically still pricing in a 94% chance of a rate hike, 25 basis points come the July meeting. Nothing new there. But we said to watch the September, right? September, we said this was at around 20%, 27%, or 23%. I can't remember the exact number. Yesterday, we said if that starts going up, the market will perceive that as the Fed, the probabilities may increase, but this decreased, which means what? It means that the Fed, that we're pricing in the possibility of pausing right here at this level. Now, things can obviously change moving forward, but that's what the market's doing now. And you can see that visually here. We were up just above 20%, as I stated, right? The probabilities of raising into the month of September were increasing. And now, after the CPI report came in, we dropped that off, increasing the probability over here. You can see the rise that we are going to be keeping them as is. Now, what did the markets do overall? I want to look at the weekly expected move sheet. This is something that I share with my Discord group, okay? But I'm going to show you something that I don't actually typically put on there, which is question mark, is it outside of the weekly expected move? And when it's green, it means it's above the upper end of its expected move. And when the asset is in the red, it'll be in the below the lower expected move. And then all the yellow, that means it's still within the range of the expected move. And there's something very interesting here that I want to just point out. Just take a look at the dollar, all right? This is UUP, right? The UUP, it dropped significantly today. And this is just how important this asset actually is from an intermarket perspective. This thing dropped further today, which will show a chart. We'll show the chart right now. You can see it dropped pretty heavily today. And that really perpetuated a lot of moves across the board, getting a lot of these various assets outside of their expected moves, including, consumer discretionary, XLF, utilities, okay? A lot of these names, energy, consumer communication, XLI, semiconductors, XBI, which is biotech. We have regional banks outside of it. XOP, we have miners outside of it. Okay, so big moves over there overall. And you can see the only red one is obviously the dollar. Now remember, 68% of the time, if you think of this as a distribution curve, prices close within the expected moves. So it doesn't necessarily mean that's always going to be the case, but that means this week we have 2 trading days left, and the majority of these sectors and products are outside. So what can keep the market potentially going? Well, take note of the big mega cap names. These ones have not got outside of their expected moves, and these have a large weighting in the S&P 500, in the Nasdaq 100. So if these start to rise, that even if some of this stuff backs off, the market overall may be, alleviated from if we do start to see some other products fall from a broader market perspective. If we take a look at some zone levels, you can see the dollar broke outside of its lower band, and that really perpetuated the move there, in gold and silver getting outside its upper moves right there. And this is one that we've been talking about, if you go back a couple videos ago, of the price action in gold is something that you don't want to miss, right? Expansion leads to contraction, contraction leads to expansion, and we started breaking out of this wedge pattern. So yeah, it was a pretty strong move. Look where it came from. The dollar's outside of the lower of its weekly expected move. So to see this potentially, yeah, it could potentially rise up, but cool off here in the very near future is a possibility. You saw a big move in the price of silver there too, as well, up 4.42%. And we know that this has a strong correlation with the miners. And then if you take a look at emerging markets, you can look across the globe here. That's just a gigantic move, up 2.24%. Big gap up, closing at the high of the day. And this is all coming on the back of the CPI report and the dollar really taking a hit off that report. If we take a look at the daily time frame for the S&P 500, it is trading outside of its weekly expected move, right? We talked about the other day about this potentially being a cup with handle pattern. We said when it gets back above the quarter to date anchored VWAP, that's when you want to be more bullish. So if you played this, boom, you're up here. Always consider updating risk or taking profits or whatever the case is, depends on your time frame that you choose. But now remember, 68% of the time we finish within the expected moves. So is the S&P 500 going to cool off here, this week and come back and close within this? That's a possibility. But if we do come back, just pay attention. It's actually in confluence with this prior resistance. Once resistance is broken, it could potentially become support. So there's a couple levels that I'd say continue to watch, and that's going to be the week to date anchored VWAP, which I'll point out here momentarily. But you can see today, look at where we opened up at. We opened up just above the daily expected move, which we discussed yesterday. It tagged it and used it as support. We came back down and we closed basically right on that, creating somewhat of a flag type pattern, which could potentially hit us a little bit higher. But if we update those expected moves, 448.48 to the upside, 443.56 to the downside. So if this starts moving up and this comes down, we'll have confluence of prior resistance. We'll have the week to date anchored VWAP. We have a gap down here. So if you're looking to potentially, look for areas to, buy the dip, I would say potentially into this area could make for a good intraday trade or adding to a potential position. We're above the 5-day moving average. So the longer we stay above that, this is going to start moving back into that inclining stage. Okay. So that is what I'd be saying to pay attention to, but just be mindful that we're outside of this. Remember also to note, this doesn't necessarily mean, right? It's 68% of the time. So statistically speaking, there's a higher likelihood that it comes back in. However, when we get far outside of it, if the options market was this incorrect, they need to hedge, right? The dynamic hedging takes place, which means buying into more buying into more buying could very well get us up into that upper daily expected move up there too as well. So we always got to be prepared for those type of scenarios. If we take a look at the Qs, as we stated on multiple assets, they were not outside of their weekly expected moves, but the Qs came outside of it. And then we closed right basically on it. You can see this little cup with handle right here, this very tiny one. We got back above the quarter to day anchored VWAP. That's bullish. And then we had that big gap up today into that weekly expected move. You can see here, price got outside of it and it actually opened right where that daily expected move was. We closed, we doodled around it, and we got right back up into this area, closing just slightly outside of the daily expected move today. If I update that, 375.51 to the upside, 370.13. This looks like a trend line to watch here. If we break outside of it and we can hold that weekly expected move, potentially we do go and continue this move to the upside. I did anchor a VWAP to the lower low of the day. So if this gets taken out, I think that opens the door to at least go retest the low of the day and or the lower daily expected move, which is in confluence with this prior resistance. Once resistance is broken, it can become a level of support, which it just showed it could and did. Now we're above the 5-day moving average. We're above the week to date anchored VWAP and the quarter-day anchored VWAP. So everything's bullish. So you just got to be, mindful even if we get a sell-off in these contexts down to here, right? There's still rather like in a sideways range. So it can take that blow and potentially still continue its move higher as time progresses. But as we watch it, just pay attention to the 5-day and the quarter-to-day because you want to hold those levels over time. If we hop into the seasonality chart, just quickly again, coming into Friday, that's what that day is. So we have tomorrow's trading day, then Friday, that would mark potentially where the seasonality weakness kind of begins. If I take a look at the BPCO and PQ, we do have a negative divergence there on the bullish percent index. BPSPX, this thing continues to rip over here too in overbought conditions. If we take a look at the summation index for the NYSE, this thing hasn't had a potential change in trend, but I will say that the Nasdaq summation index did just have a potential change in trend because the parabolic SAR, as we've been discussing, just ticked over. So we had a tick over here. Now we ticked back over. When we ticked over here, what happened? We consolidated. Now we ticked. Is this where we start to really get going again? Or, are we going to come back down? Is this thing going to just kind of go sideways for a little bit, kind of like it did over here? Time will tell. But as it stands right now, we're still just kind of floating around that zero zone, and we just had that change. That's all I got for you on today's episode, everybody. Have a wonderful day, and I will be back here tomorrow.